even buttermilk, like literally our restaurant.
Yeah, fire food, bro.
Oil.
Fire.
I appreciate it.
Fire.
So, bro, the cost of oil, honey, flour, corn, like literally like basic shit, like literally they went up by like 100, 150, 200%.
Damn.
It's crazy. Yeah. Honey. So people will ask us, they'll be like, oh, can I get like a dipping sauce of honey? It's such a stupid example, but people will be like, can I get a dipping sauce of honey? And we charge $2 for it, right? And people will say, oh, like, it's so expensive. No. Like honey is so stupidly expensive now that little thing, like that alone probably costs us $1.
True. So there's not much like turnaround.
No, so it's not like the margins aren't like, you know what I mean?
Yeah,
like,
yeah.
Everything, like people are so quick to criticize like restaurants, stuff like that. Like, man, like the cost of everything has went up so much, and now also minimum wage is all going up, and like everything's just going up so quick, and everything's happening so fast that if you don't change your prices, like you're not going to be making money.
Yeah, or surviving.
Which is so stupid. Because imagine like us, right? Like obviously, if you're a busy restaurant, like imagine us with how busy we are. Imagine like all that volume, but us not making money. It's like what the fuck? Like what a waste of volume.
Yeah, exactly.
You know what I mean? Like you have to increase price. Because or else you're just gonna get like you're not making.
You're gone.
So Basil, bro, like let's start from the beginning, bro. Like when did you get into all this? Like when did you get into business and all these ventures? How did it start?
I started when I was 19. I started the bank. Before that, I had no idea what a TFSA was, what a mutual fund was, what an investment was, compound interest. I didn't know anything about anything. And then I got a job at the bank. I kind of started like learning about the products that we offer, TFSAs, all, again, like everything I kind of just named. And I started seeing a lot of the wealthier people that used to come in, and I used to see a lot of their accounts. And I'm a very like not shy. I'm not a shy person at all. So I ask questions. So if I see someone who's wealthy, I'll ask them questions. Everyone who I'd ask is like, oh, I invest. So I kind of started like digging deep into it. I started with stocks actually. That was the first thing I ever started with. And I started like doing like individual stocks. I started like kind of like getting into Tesla, Shopify, all that type of stuff. And I was doing okay, like not even doing okay. I was more of a long-term thinker. I've always been a long-term thinker. So I liked bigger, like the blue chip companies, like more Apple, again, Microsoft, whatever. So that's kind of what I was investing in. And then what happened was, again, I started just learning. I started getting myself educated because I knew that all these wealthy people, the only thing in common wasn't that they had like a lot of money in checking account. It's that they had a lot of money invested with the bank, which again, might not be the best idea, but again, at the point, like at the end of the day, they had it invested.
Yeah.
So my one friend who started working at the bank, who was working at the bank at the time, he had this like development company in the Bahamas, and I thought it was a really cool idea. And I was in university at the time. I just finished my third year.
What did you go for school for?
Engineering.
Okay, sorry.
I finished civil engineering. I did that, and then I was doing an internship year between my third and fourth year. So I had a year off basically where I was working. Yep. And I was very grind type mindset. So I just wanted to work a lot. I still had my part-time job at the bank. I had my full-time job at the engineering firm that I was working at. And then I thought I'd have like more extra time. So I went to my friend. I was like, hey man, like I don't care to take a salary. I don't want to get paid. Can I just like be involved in your company? Just somehow. I just want to be involved because I wanted to kind of grow with him. Because the things that he was talking about were like good stuff. Like again, I was telling you like he was basically wholesaling developments.
That's crazy. In Bahamas.
In the Bahamas, and then he moved it to Canada as well.
Damn. Oh, damn.
So he basically literally would go to, it's same thing as wholesaling. Like it's just on a much more
bigger
massive scale. Yeah. He'll go to people who had to sell their developments, and then he will basically connect. He'll take it on, connect the people, the contractors, whatever.
He'll sign the contract.
The people who actually do the developments. Okay. And then we'll just kind of like take like a big fee in the middle.
Yeah.
So I like the idea of it, and I told him I was like I want to work for you for free. I just want to be involved in something, and we did that. That's how we got into a project in Barrie, and it was like a $19 million development project. We had to raise $19 million to be able to make. I think it was like something along the lines of like $4 or $5 million on that one project.
Damn.
So it was crazy money. 25%. But obviously it's very, very hard to raise that amount of money. Yeah. For a 19-year-old, we were both like, he was 20, I was 19. Damn. We didn't have any experience or whatever.
Yeah.
So I ended up reaching out to people that I knew. I ended up reaching out to Jeff Weibo, the guy. Yeah. So, he's a big realtor big realtor investor in the network. and he basically told me to come to OREC. And it was like an Ontario real estate conference. So from there, we ended up meeting people, ended up learning a lot about the actual real estate, like the idea of like the whole like Burr method. And I think FIRE was a very big thing at the time, like the FIRE movement. Like Dylan was talking about it. Matt McKeever was talking about it. All these guys were talking about the FIRE movement. And I don't know, I found it so interesting. So we basically took that on, hired a coach, hired Corey. And then while all that stuff was happening, the reason why this whole wholesaling thing didn't work out is because my current partner, his partner at the time, turned out to be like a scumbag. Okay. And ended up like fucking him over. So can I swear in this?
Of course.
Yeah. We're past 3 minutes.
Okay, perfect. So he ended up like basically like screwing him over and ended up just lying about everything. So that company kind of started dissolving itself, kind of fell through. So we started our own company with real estate. Yeah. And that's how we kind of got into it. Honestly, it started off. The first property we ever got was like a 93% VTB.
Can you explain what a VTB is?
Yeah. So for anyone who doesn't know what a VTB is, it's actually very popular now. It's growing a lot now. So let's just say someone owns 100% of their property. They have no mortgage. I will come to you and say, hey, I'll give you a down payment. I'll give you whatever, 10%, 15%, whatever you guys agree on, and you will basically lend me. You're basically the owner is basically the bank now. Okay. So he'll give you the equity of the home. He'll give you whatever remaining. So you now own the home. You give them a down payment, and then you now pay them a monthly like an interest, like a mortgage. Yeah, okay. Essentially is what it is. So it's a really good way for people who don't have a lot of cash to start off, especially for people who are self-employed, younger people, people who can't get a traditional mortgage. If you can get a VTB, it's crucial because you don't have to do any well you can do credit checks, but it's very easy. It's very easy to get a lender to agree on a VTB. You can normally negotiate a little bit of less of a down payment. So like we did 93%, which means that we only had to come up with 7% down. Okay. On a $230,000 property. So we nothing. I think all in with lawyer fees, I was in 21 grand or something like that, or 20 grand, which a lot of people have nowadays. Mm-hmm. Again, it's different times. Obviously properties there now are a lot more expensive, but the premise still stands. If you can get a VTB, it's always better. So that's how we started. A month later, got a duplex for like 210 grand. Duplex, it was the reason why it was so cheap. It was like a horrible area. It was like Western Fair area, so kind of East End, not the best area. The tenants that were there were horrible. Yeah. The owners were the tenants' parents, so their rent was like dirt cheap. Jeez. Like all in, I think rent was for both units was like maybe like $1,000. Damn. Something like that.
Imagine that now.
Yeah, it was crazy. So we basically we ended up having them for a whole year. We ended up basically having to like carry all the extra expenses. Our mortgage broker messed up that deal for us, so we ended up having to what initially was supposed to be a 5% A lender. It ended up all working out, but it was supposed to be like a 5% down A lender mortgage. Ended up being a 20% down B lender mortgage. So everything was just kind of all over the place. Plus, we were just closing on we just closed on the property that we just had, the townhouse, the one the VTB one. Everything was kind of like a shit show at the time, and this is while I was working my full-time job and my part-time job.
Yeah, damn. So you're a busy guy, yo.
So man, like I was working like maybe like 80 hours a week easily. I started getting so burnt out. I started like there was just so much happening. And then everything eventually just kind of like worked itself out. Everything kind of eventually just started like flowing normally. And that's when we started kind of growing, getting a property here and there, growing, selling it. So this is when COVID started happening. So we bought a property in November. I remember in November of 2020. It was a student rental right by Fanshawe. Amazing price. Obviously now I wish we held on to it, but it doesn't matter. We bought it, and then within 2 months, this is January and February of COVID time when COVID started really picking up, and we started seeing this trend of like all the properties going up. We sold it right away, made like 80 grand on it. Yeah. And we started using that as our like flipping capital.
Yeah, kept on pushing that.
Yeah, because we kept on pushing it. Had an amazing 2021, but then obviously 2022 happened. So I feel like I'm like going on a tangent now. Yeah. But like now this is like the actual, just like the whole real estate journey for me, I guess. Yeah, so this is our whole journey. 2021, amazing. We made a lot of money, very, very good money. Kept all of our rentals. Everything was going fine. But this is where we started. This is where everything kind of started taking a turn. So we tried to grow a lot faster.
Yeah.
We tried to get a lot of flips, which we didn't make stupid decisions. We made very good decisions. Like the properties that we were getting were all in good areas. We had a good, like, I think we were buying at like 50%, like, you know what I mean? Like loan to value. Like we had like very good equity in all the homes that we were buying. The problem is I underestimated how much cash you needed to do flips. To do multiple flips at a time.
How many were you trying to do at once?
I think at the time, our peak was like 4 at a time. In the sense of like, I think we had two at a time. And then we were getting into our third and fourth, but we still had them all at the same time.
And is this your corporation buying these properties?
Yeah. So we ended up having all corporations because obviously it's a lot cheaper. The first account that we had didn't help us with that. He's like, oh, unless you're like flipping like 7 properties at a time, keep it personal.
Yeah.
But then no, that's absolutely horrible advice because literally even if you're doing three flips a year, open up a corp because it's gonna be much cheaper for you.
100%.
So so then we ended up having all these properties at the same time. Required so much capital because the problem is for you to be able to get all these properties, you're going to do private, right? Private mortgages, which are stupidly expensive, but they work, right? Like anyone who's doing flips knows how they work. Private mortgages work, but they're also very expensive to hold. So the problem is with all this capital that we had, it started delaying all of our projects because you needed so much capital to pay materials and pay contractors. So now instead of holding our properties for 3 months, we were holding them for 5 to 6 months, which again makes your holding costs double. And it's not just double on a $1,000 mortgage payment. You're doubling on $4,000 mortgage payments.
And it's 4 of them at the same time.
And it's 3 exactly. So it's 3 to 4 of them at the same time. So we started getting into so much cash that we didn't have any cash. That it started delaying. So then we started having to put second position mortgages on our rentals. Obviously ate into all the equity that we started making. And then at some point we were forced to sell our rentals because we needed to float ourselves.
Yeah.
So there's a lot of things people don't talk about. Like a lot of the investors.
No, it's not, bro. It's important to hear because what you're talking about is like, how do I say this? Like, a lot of people don't even think that they are capable of doing stuff like that. Moving so many assets, moving money, like making the world spin, yo.
Yeah.
You know what I mean?
It's just a lot of people just talk about like, oh, I flip 30 houses a year and that's how I make money. Come learn from me.
Yeah, but don't tell the back.
But they don't tell the back. There's a lot of bad stories, man. There's a lot of people when I started real estate in 2019. There's a lot of people that started at the same time as me. Obviously, some people did well, but a lot of people went bankrupt. And a lot of people had to put, like, again, people don't talk about this. A lot of people started having to put mortgages on their primary residence. A lot of people lost their primary residence. It's a dangerous market to be in when things aren't going well, because you're not dealing with. If I'm dealing with any other business, you're dealing with $1,000, $2,000 type problems, right? In real estate, you're dealing with $150,000 to $150,000 problems, and that's just the initial problems. You're not talking about the problems of a $500,000, $600,000 mortgage. Right? People don't talk about that type of stuff. So I think anyway, so we ended up getting into these problems, ended up having to sell all of our rentals. So basically all the work that we did over the last like 3 years, we basically ended up breaking even. Okay. Which is a shame, obviously, because
that experience though.
So that's the thing, right? So if you ask me now, like, do you regret doing that? Absolutely not, because it taught me so much. First of all, if you tell me, like, listen, you're starting at 25 buying properties, because I'm obviously resetting now, right? Yeah. If you start buying properties at 25, knowing all the shit that you went through 3 years ago, I'd say I'll take it, right? Oh, yeah. Again, we didn't lose money. We didn't go bankrupt. Like, we didn't lose obviously we lost our own money. Yeah. We didn't lose anyone else's money. Yeah. Which a lot of people did. Again, a lot of people lost so many people. I know a guy who had a good friend of mine. He had 150 grand with an investor. That 150 grand was a week away from going to zero, because a week after that he gave him his money back, the guy went bankrupt.
No.
Jeez. So a lot of people lost a lot of other people's, like family, friends, other investors. They lost a lot of people's money. Thankfully, we didn't do any of that. We didn't have any of those issues. But we basically just broke even.
Is it tough? Like, was it tough to have those conversations? Like lend me X amount of money. Like, were you going to like investors or family members?
Absolutely, yeah. So I started going to friends. So I started going to people who were friends of mine. Yeah. Obviously, my dad is. Oh my god, my dad is not at all like, he's a very conservative type. Like, will never lend $1. But my mom, thankfully, is a lot more kind of like savvy. So she kind of helped me out a lot more. Friends helped me out. They are tough conversations. I'm not gonna lie to you. They are very awkward conversations of saying like, "Hey man, like this is the situation that we're in. If you don't want to help me, obviously I understand, but I would appreciate." You know what I mean?
Yeah.
And that's what trust is built on. That the only reason people helped me is because they trusted me. They trusted that I'm not trusted my business models, but they trusted I was like a genuine person. They trusted I'm a guy who will not fuck you over.
Yeah.
For the benefit of myself. You know what I mean? That's kind of what I base myself on. I think personality, having those connections with people, man, having connections with people trumps anything. Like trumps experience, trumps like being knowledgeable, all your licenses. Man, you can have all these licenses in the world. It doesn't matter if people can't trust you and people can't actually see that you're a genuine person. And that's what I try to do throughout all my business practice. So that's like now being a financial advisor, that's one of the biggest things I try to portray is genuine. I don't want to screw anyone over for my benefit.
Yeah.
At the end of the day, I think as long as you're transparent and you show your personality, you have a good personality that people can relate to. That's all that matters. That's why my biggest thing is I tell people know a little about everything.
Yeah.
Because you make so much more connections that way. Man, the amount of people that I make connections with I now am into like sports. Like I'm into football. I love football now. But I wasn't 3 years ago.
Okay.
But the amount of like stupid, like random conversations that I had about people with football, based off of knowledge that I just knew a little bit. Like I knew that, like, for example, like I knew like whatever, like I knew the Patriots were good, for example.
Yeah.
So I'll see a guy wearing like a Patriots hat. And I'll start random conversation. I'll be like, oh, so like how, like, you know what I mean? Like, oh, like must be nice being a Patriots fan, right? Like, you guys have all these championships. Kind of, and then they start making connections to you. Again, do I know the most about football? No, I didn't at the time. But it's just random conversations that you end up having with people. And again, you just start building those small connections, and it kind of starts growing. And then from there, people start trusting you.
Did you realize that like at a young age that like networking was that important? Like were you always that young kid savvy talking, trying to get into rooms, or
not really, not until I started in real estate. Not until then. I always thankfully was like a social guy to a certain extent. But what I really tried to learn is being genuinely interested in people's conversations. I used to be very I still am to a certain extent right now. I'm still working on it, but I used to be very like, you talk to me, in my mind, I'm already like generating responses, and I didn't actually hear what you were saying. You know what I mean? I was just in my head. I was kind of already formulating like things to say. Yeah. I was always just like talk. But once you actually learn, and again, I'm still working on it. It's not an easy thing to do. Once you sit down and actually start like listening to the things that people say and actually understanding it and dissecting it, those are when relationships and connections can really be built. Because until then, if someone, let's just say you had a conversation with someone and they tell you, I'm into Legos, for example. Right? If you 3 months down the line buy them a Lego set, you know what I mean? And again, obviously you have to have like right intentions. Like you want to do it. But let's say their birthday's coming up. You giving them that Lego set, even if it costs like $100, is probably way more valuable to them, or way more like it shows that you actually care about them, way more than someone who's going to buy them like $1,000 suit.
Facts. It's because
you actually listened. You actually like made that connection with that person of like, this is what your actual things, like this is what you actually like. These are the things that you're actually into. And then now they know that like this guy likes me, but
he listens to what I say.
Yeah, he listens, and exactly, and that's why they're a lot more open to talk to you now. They're a lot more open to actually like get deeper into connections. Yeah. That's where it all stems from, just listening.
And I find too, like at networking events with investors and real estate investors and all them, like everyone likes to talk about what they're doing. You know what I mean? They're very like open. So like, Absolutely. The second you crack that door open, they're spilling everything, all the information.
100%.
Like, it's true. And it's important too, right?
I want to ask, because you talked about your parents earlier. Did any of them have any rental properties or anything like that?
No, man. No, my parents were very conservative type, like older Middle Eastern people, right? Like I think my dad paid off his mortgage in 3 years just because he didn't want to owe anyone anything. My parents have a line of credit, very, very large line of credit. It's suspended. Not suspend, like
inactive.
Yeah, because they don't use it.
He says no. My parent, like my dad, went to the bank and said, "Hey, I want this line of credit suspended."
Because he doesn't use it, or what?
Because he doesn't want to use it. He doesn't want to use it. Like he doesn't want any dollar being ever put on his head.
Yeah.
Right. So this is the biggest thing. Older people know what they're talking about. Not obviously you take the good, you take the bad, right? So obviously, like, is my dad doing it from a financial perspective? Is he optimizing his finances? No, obviously not. He has a line of credit. He could easily invest it. It's a large line. He could literally buy a house with that line of credit.
Mm-hmm.
You know what I mean?
Yeah.
They have their house is fully paid off and they've never owed anything on it. They could put a mortgage on it, use that. They could, you know what I mean? Like invest in other things. So is he the most optimal financial person? No, but the things that he does talk about, and I didn't listen at the time because I was so in my head of like, no, you don't know what you're talking about. I'm flipping houses. I'm buying all these rentals. I know what I'm doing. When in hindsight, a lot of the things that he was saying, like the small stuff, actually, if I actually listened to it, I would be in a much better, and thank God I'm in a good position right now, but I would have been in a much better position if I took some of the small advice that he gave me. We moved here in 2012. So I was born here, moved. We used to live in like Abu Dhabi, Dubai, for people who don't know.
Oh, damn, okay.
We used to live there for almost like half of my life and moved back here. And back home is not like, man, like you don't go into a bank. There's no such thing as like a kid doesn't have a debit card.
Yeah.
There's no such thing as like going into a bank and like doing, it's like there's no credit cards. There are now obviously with older people. Like I didn't know what a credit card was. I didn't know they don't have those things there.
Okay.
So financial literacy is just absolutely zero there. Even as bad as it is here, financial literacy here is horrible, but it's even worse back home. You don't learn any of this type of stuff. So yeah, no, they didn't have any rentals. They didn't have anything like that. They just had money that they saved, and that's all it was. Money that they saved throughout their whole life. They never invested in anything. And then yeah, that's basically how it worked. And that's why I didn't learn it. That's why I didn't know anything until I started the bank.
Okay.
Because they didn't teach us any of that. And no knock to them. I love my parents. I'm thankful for everything they've done, and I will literally never trade anything that they taught me for anything in the world. But at the same time, you don't learn any of this stuff when you're younger. So a lot of parents now, I try to tell them like, man, like you could, if you start your kid up right when they're born, you could genuinely, you might not change your life, but you could change your whole generation. Like if you could change your kid's life, mm-hmm. and you can change you can change a whole generation's worth of kids if you just set your kids up right.
What would you recommend to do that then?
Learning. I think education is a big thing. I think investing. People don't understand the power of compound interest. People really don't. Compound interest is literally the most powerful tool to become wealthy. Anyone with little knowledge can become wealthy if they use compound interest. Which, for anyone who doesn't know what it is, it's basically you investing a certain amount at a certain time, whatever, and you get a certain rate out of it, right? Whatever. Let's say you invest in the market and you get whatever 5% annual, whatever, it doesn't matter. But if you do that over a 30, 40, 50 year span, it starts adding up so much, right? People are so short-term minded. They're so if I'm not making 50,000% return in the first 2 years, I don't want to do it.
Yeah.
When it's like, if you actually just, if you're young, to anyone who's young, if you start when you're 20, 21, 22, like starting at 20 and starting at 25, that 5 years
is big.
Could literally generate you $500,000, $1 million. It can generate you a lot of money if you just start earlier. So again, it's basically you investing a certain amount at a certain rate and you growing it at a certain time period, over a certain period of time. So the problem is with compound interest is a lot of people will need that money, right? Yeah. A lot of people will do it for 5 years, 4 years, but then they'll pull all their money out because they need it for something. And that's actually where, I don't know if you want to get into it now, but that's kind of where the infinite concept,
let's get into
the infinite banking concept comes in, which is why I like it so much, because I'm a perfect example. I had a TFSA where I was investing into the S&P 500.
Yep.
Every month, and I did it for about 2 years or 3 years, and it was growing. Obviously, it went down. Yeah, by the time it obviously went down because of the way the market turned. But I needed that money, so I took out all that money. Any growth that I had, is now not growing anymore. Any compound so it's called the compound interest curve, right? So if it's like so it's an exponential growth like that. So if I started like going up it, as soon as I pull all my money out, now I'm back to zero growth. There's no growth anymore. So now basically I have to restart my cycle, which again a lot of people don't understand like how much money or you can lose, but how much opportunity you can lose by restarting your cycle. Mm-hmm. So I needed all that money, so I took it all out. Obviously, I took it out. I think at a loss, because by the time I started investing, the market obviously took such a big downturn that I actually ended up either breaking even or pulling out at a loss. Mm-hmm. So the reason why I like the whole infinite banking type stuff is because it's uninterrupted compounding, right? The money that's growing, even if you use that money, if I needed that money, it's still growing. I'll give you like a proper explanation of what it is. If you guys want to get into it.
Let's hear it. Yeah.
So the idea of infinite banking, a lot of people don't like the idea of insurance, right? Insurance just sounds like a horrible word, which I agree with that. Insurance just sounds a little bit weird. But if you just eliminate what the word is, like eliminate what the actual product is, the idea of it is basically you put in a certain amount of money into an insurance policy, into a whole, it's called a whole life policy, which is growing at a dividend rate that is annual, set by the insurance company. You have a death benefit and you have a cash value. So the money that you're putting in goes into the cash value. Obviously, a part of it goes into the savings component and a part of it goes into the death benefit. It's paying for the insurance. Mm-hmm. Every year there's a dividend rate that it's growing at. This year Sun Life did it at 6%. After all the fees and whatever, you're probably looking at about like 4.5 to 5.
Both are growing, the cash and the death?
So the debt, yeah. So basically the way it works is the cash value is growing at that rate.
Yeah.
But when you put money into the cash value, a part of it is you're buying more death benefit. So that's why it's growing.
This goes back to the compounding.
Goes back to the compounding. So the cash value is compounding, right? And it's compounding again, like I said, it's compounding at whatever rate that the insurance company does. So the nice thing about it, which is why I like it so much, you can borrow against that policy, which is why investors love it. It's because you can borrow against that policy, but you're not actually borrowing the money that you put in. You're borrowing the insurance company's money. So my example of my TFSA, I needed that money, so I pulled all of it out. So now there's no money compounding anymore, right? There's no money money growing. In the insurance thing, you're borrowing against it. It's hard to kind of explain, like, but I'm trying like my best.
Is it almost like a loan in a way if you kind of look at it?
Yeah, so it's a loan. It's a loan that you're borrowing.
Yeah.
You're paying interest on it. The interest is normally around like prime. It's like normally around like what the fixed rates are. So prime plus whatever. Yeah. Like prime plus 0.5, 0.1, whatever. And what you're doing is your money is still growing, but you took the insurance company's money and you're using it for whatever you want.
Mm-hmm. But you don't lose, like back to the TFSA, you're not losing that money.
You're not losing the compounding aspect of it. So it's still, your money is still growing. So let's just say your cash value has $40,000 in it. And let's just say next year you were with the schedule, you were supposed to make around like $8,000 on it. Yeah. Right. If you pull out that $40,000, you are still going to have an extra $8,000 next year because your money was growing. I'll give you like an actual example of how people use it, how investors use it. So let's just say you have a retained earnings, right? Your retained earnings means that if you have a business, retained earnings means that it's money that you have every year that you're not using.
Yeah.
It's money that's in your business that's sitting there. Now the biggest problem for corporate people, for businesses, the biggest issue is what? How do I pull out the money tax efficiently? Which you can't. You're going to be doing, if you pull out money, you're going to be doing it 50% or whatever your tax bracket is. And the other biggest issue is, again, so number one is how do I actually use the money that's in my business without getting screwed on tax? The other issue is how do I invest my money? People don't know. There's no such thing as a TFSA for businesses. There's no such thing. So if you invest your money, you're getting taxed on that growth.
Yeah.
So again, how do you combat that? So what a lot of people will do is they will, let's just say you want to private lend. What do most people do nowadays? I'll ask you, if you want to private lend right now, what would you do? How would you go about it?
I would have them, like, ever sign a like X amount a month. I want to get paid back on like 9%, 11% on my money.
And you'd use what? You'd use your savings, correct? Like you just use an amount that you saved, or
savings probably, but like I get what you're saying now. It's like you don't better not to use your own money.
Take the policy.
Exactly. Exactly. That's the thing. It sounds like it's too good to be true, but this is genuinely how my friend, like how literally people that I work with do it. They start a policy of like whatever. Obviously, it doesn't matter how much.
So $1 million. Start there.
So the way that it works is like, so you're paying into it. So let's just say on average you can afford to pay 50 grand a year into this policy, which is like whatever, like 8 grand a month. Yeah. Because you're a business owner, you have a lot of that income generating anyways. Mm-hmm. So what you will do is you will have that cash value, and what a lot of the big guys do, they will keep their money growing into the compound, but they'll borrow from the cash value, and they'll lend it out. They're paying an interest on the loan that they're paying, but it's obviously minimal. It's you're still compounding better. Yeah. A lot of people don't understand this. The difference between an interest paying schedule like a loan versus a compound is just not the same. This you will end up over a 5-year period outgrowing your you will end up outgrowing the compound interest is going to end up outgrowing the interest payments by a lot over a 5-year span. Yeah. So you're making money on this side, you're compounding your money on this side still, but you're also private lending and growing your money at whatever 10-15%. So you're making money on the private lending, and you're also still compounding your money, and you're still on that curve.
Yeah, because you're never out of it, right? Because you're making more money because I'm lending someone else money, getting money from them, and it's also compounding. I want to ask, I thought, wasn't this only in the U.S. or when did this get implemented in Canada?
It's been a thing. It's always been a thing in Canada. It's been a thing in Canada for a very long time. It's just way more popular in the U.S.
Yeah, because that's where I've heard about it. Yeah. But I like last time I talked to someone, they said you couldn't do it here. Like,
no, you can't. I don't know who
told you that. You can.
Absolutely, you can.
Yeah. Okay.
It's a thing that a lot of the big people do. A lot of the big companies, like literally the biggest companies, all have insurance policies that they do. Banks have gone bailed out by having cash values that they end up borrowing when they needed it, right? Like in 2008 and all that type of stuff, banks got bailed out by that because they ended up just taking the money from their cash values. It's a big thing that people, again, it's very niche, but to anyone who, and people think like you need a lot of money. It's who can use it, right?
I was going to ask that, like how do you get into this? Like who does it benefit most, you know?
Who does it benefit? It benefits any business owner who has retained earnings, right? Any business owner who has money, you can use this, because at the end of the day, again, one of the big questions is how do I pull out money from my business tax efficiently? The nice thing about this is it's the loan that you're taking, it's tax free. Everything about this is tax free. The growth that you have in this policy is tax free.
Can I only borrow what I've paid for it so far, or like I can borrow the amount?
So you borrow whatever is in the cash value. So again, at some point, it's gonna start compounding. So you're gonna end up having more money in the cash value that you ended up paying for. Mm-hmm. Obviously, it takes a few years. Like it doesn't. And
it's also not like I could go today, put 5 G's and think I'm gonna pull out 40 kind of thing, right?
No. Yeah, okay. So it's the money that you're saving in there, right? That's why the biggest thing, it's like a savings account. Okay. It's like a savings account on steroids. Okay. Because you have this money anyways. It's money that you have sitting there in your business. It's just sitting there anyways. So you might as well put it to use. You might as well make it grow. And a lot of people, why they don't like their money growing or why they don't like their money invested is because what happens if I need it a year from now? That's the nice thing. Yeah, you can use it. You can actually pull it out.
There's no penalty, nothing.
No, there's no penalty. You literally go to an insurance company. You say, "Hey, I have $100,000 in my cash value account, or in my policy. I need the money."
What's the process? Like it's quick. Like a week.
The only question they'll ask you is, "Do you want it as a check, or do you want it deposited into your account?" There's no credit checks. There's no like it doesn't. And the nice thing about it is like even if, let's just say, obviously ratios, right, when you're doing your mortgages, it doesn't show as a loan on your mortgage.
Oh, sick.
So there's so many benefits to it. Like I want to keep. I think I went too much in detail. I want to kind of keep it a little bit high level because I don't want to confuse people. I don't want to like over educate because it takes a little bit of like showing. But moral of the story is people who have any money in their account that they don't use, any savings. Let's just say you make as a personal, for your own self. Let's just say you make $100,000 a year and you save $1,000 a month, for example. I would rather put my $1,000 a month into a policy. Have the also, we're not even talking about the death benefit. The death benefit is also like a little cherry on top thing. You know what I mean? Yeah. You get a death benefit. You get a cash value that's growing uninterrupted, because again, the biggest thing is, you might be able to get returns somewhere else, right? You will. There's no, you guys are in real estate. You know that you can get more higher returns somewhere else. But again, the uninterrupted part is the nice thing. The uninterrupted part is the thing that the guaranteed,
the security
is what makes it so nice to talk about, is because a lot of people, when they need that money, they'll use it, and then you're off that curve.
It's a safer route. It's a much safer route.
How long have you been doing it then?
I learned about it. So I started in October, because that's when I learned about it.
So it just happened.
That's when I learned about it, right? That's why. But as soon as I learned about it, I did so much deep dive into it. I learned so much. I read. I think I'm already on my 3rd different book. All I did was listen to podcasts. I'm the only person in my office.
Yeah.
Who knows? Even though I've only been there since October.
Yeah.
I'm the only person in my office who knows as much about whole life policies as I do, because I've taught my managers stuff about whole life policies.
Did they even know about it?
They knew high level, but they didn't know the way to do it. Like, they didn't know
how to pitch it. Maybe
powerful of a tool it really can be for a bit. Like, a lot of times when I bring it up, they'll be like, oh, just focus on the other stuff.
The easy stuff kind of stuff.
And I'm just like, I don't want to do that, because this is I'm big on, I will only talk about the things that I believe in and things that I do.
Yeah.
It goes back to the being genuine and being honest with what you do. I know someone who, I used to work at the bank at TD.
Yeah, same here.
Both of us.
Both of us. Yeah.
Okay, there you go.
So, literally TD.
So you know how big they are on units and
conversions,
pushing products. And don't get me wrong, like, do your thing. You know what I mean? Like, if you want to sell products. Like, I don't care. I was always one of the higher performing people in my branch, but not like selling like stupid stuff to people who don't
open
need
an
it.
account that doesn't
like
need it, or insurance on a credit card that you don't need.
Man,
stuff like that.
I remember this one time, my manager, I swear to God, you can't make this up. this old, like, 80-year-old, like, woman, right? She had a good amount of money. She had a good amount of money. She was like an 80-year-old lady. I swear to God, my manager came from behind me and said, "Did you talk to her about a credit card?"
Jeez.
I'm like, what? Like, what are you talking? What are you talking right now? Like, what are you saying? Like, why would this old 80-year-old lady who has a good amount of money, like, what? Like, do you know how foolish I'm gonna sound saying, "Hey, by the way, I know you know what you're doing, and I know you have a lot of money, and I know you're literally 80 years old, and you probably got pitched this a million times, but do you want like a $5,000 credit card? Like, what?"
Yeah.
It's so stupid. And this one girl who I used to work with, great girl. She's a nice human being. She's a great human. But she used to, any 18-year-old that used to come into the branch, she used to say, "Hey, like, have you opened up a TFSA yet?" Mm-hmm. And they'd say no. Obviously, these kids don't know what a TFSA is. Yeah. They're 18 years old. They don't even know what a savings account probably is. And she'd say, "Oh, like, yeah, like, it's an account where you won't get taxed on the money that you make." Now, you guys obviously work at the bank. Everyone knows. How much money does a TFSA make? What percentage do you make? 0.5%?
Yeah.
Probably something like that.
Even to, you're capped every year also.
Exactly. So she used to make these 18-year-old kids waste their contribution limit on a tax-free savings account at a bank that used to make them 0.5%, telling them that, "Oh, you're not gonna get taxed on the money that you're making." What money are they making for them to get taxed on anyways?
Yeah.
But obviously because she wanted a unit.
Yeah. The genuine part comes back again here.
Exactly. I would never, ever in my life, ever advise an 18-year-old kid. I love TFSAs, but not to open a TFSA at the bank and then invest it with the bank. Like, the bank's not giving you anything, man. The way the bank works, like, people don't realize the bank, what they do, to anyone who, I know it's getting more exposed now, but to anyone who doesn't understand what a bank does, they take your money. They don't. Again, it goes back to the policy, right?
Yeah. Oh, wow.
It goes back. They don't use their own money. They do not. They use your money. They pay you. Let's just say on $100. This is even too much. But let's say they give you $1 on $100, which is 1%, which I think is honestly too high for a bank.
Yeah.
But let's say they give you $1 on it. They're paying you $1 each year. They take your money. They're making $500. They're making like 10% on your $100. And people think, "Oh my God, that means they're making a 9% return." No. They bought your $100 for $1. They're making 9. If you buy something for $1 and you sell it for 9, how much are you making? 900%. Yeah. That's how banks work. Banks don't look for your best interest. They don't care about you. They are not looking at you and be like, "How can we make this guy money?" They don't. They're not doing that.
No, they're worried about themselves. How they can get more money coming in.
I had a kid come up to me once, and he wanted to open up a mutual fund, and obviously, like, this is why, like, I'm a good financial advisor, but I'm not at the same time for the company.
But for like people like that want to actually like grow themselves, you're the perfect person.
So he came to me and he said, "Hey, I want to open a mutual fund." I said, "Okay." I told him what a mutual fund is. I told him how it works. I told him the average returns. You're making about like 8% roughly on average year on year. But then he asked, he's like, "Is this what you do?" And I told him, like, "No, this isn't what I do." I was like, "I have I literally opened up a brokerage account with Interactive Brokers, and all I do is I put money into an ETF every single month."
Yeah, and it does
itself. And that's all I do. The management fee is like 0.15%. Like it's like nothing.
It's nothing, literally.
Management fee is nothing. I do it myself. It's very easy, and that's it.
And what do you say?
Nothing. He loved it. Like, he's like, "I'm gonna do that," and I was like, "Okay, yeah." I was like, "Absolutely. Like, do it. 100% do it."
Yeah.
Because at the end of the day, this kid's a young kid. What's a unit for me gonna do? You know what I mean?
Mm-hmm.
Like a unit for me.
They just give you a clap from the boss.
Like, all of this, man. Like, okay, my manager's gonna look at me. "Oh, good job. You're selling mutual. You're doing a good job. Like selling stuff." Okay, like, am I gonna get a raise? Do you want to hear a funny story about once how I got a raise at the bank?
The fingers.
So, this is when I kind of like, I think I was there for 2.5 years at this point. My manager called me into the office. She's like, "Hey, I'm giving you a raise to $18 an hour as a teller." This is when I was a teller.
Yeah.
I was okay. I was like
ecstatic, probably.
Well, to me, it was like, I think it was like a $1.50 raise or like $1 raise. So $1 raise isn't too bad, right? I was like, okay, cool. I was a young kid. I was in university still. I was like, okay, cool. I ended up going. So this is the branch manager. I ended up going to my manager. I'm like, "Oh, like, I didn't know I was getting a raise." And then one of the other tellers who was there for probably like a couple months, they go, "Oh, did you get a raise to $18?" I was like, "Yeah." I was like, "How do you know that?" They go, "Oh, because that's the new entry level salary that they're giving people."
But the way they sold it to you is
but the way she told me, she's like, "I'm giving you a raise." So I went back to her and I was like, "Hey, like that's not a raise. Like, what are you talking about? Like, how come I'm getting paid the same as someone who gets hired tomorrow?"
Damn.
Even though I've been there for
2 years.
I'm literally always like if not the best, like second. I'm always like top 2 in performing in the branch.
Yeah.
Like, what type of raise? Like, what do you mean I got a raise? She goes, "No, you're thinking about it wrong. Like, you did get a raise. You got hired." She's like, "You're making more than you were making yesterday." I was like, "What?" I was like, "No, I'm making the same as every single person who just got hired at the bank is getting." We kept on arguing. I was like, "Honestly, you know what? Like, sure." I was like, "Honestly, like, whatever." So I just left. I was like, "Okay, like, I don't care." That's genuine when it clicked in my head. I'm like, man, like, these guys do not give a fuck about you or what your career is. They don't care about you. They do not care at all about you. So that's why I'm okay. I'm going to sell this guy a mutual fund, this kid who's an 18-year-old kid, 19-year-old kid, who can make so much more money. I'm going to restrict him and give him advice that I don't even use. Why? Just so I can get a unit? What's the unit going to turn into? It's going to turn into a 5-cent raise, even though they don't even care about me. And, like, you know what I mean?
Yeah.
So that's why I genuinely go back to just know what you're talking about. And just be genuine with people, because at the end of the day, that's what's really gonna show. That's in any business that you do. There was a guy who sold me a tankless water heater at one of my rentals.
Yeah.
He gave me this whole spiel of like he's Italian. He showed me his house in Windsor. He gave me this whole spiel of like anything I said. I brought up Dubai.
Yeah.
And he's like, "Oh, I have family who's there, whatever." Literally, like every single thing I said, he like found a way to relate to him.
Yeah.
Great salesman. A week later, I ended up finding out that everything he said was completely bullshit.
Jeez.
He's not Italian. He's Iraqi. he literally everything he said was not like everything
just
he said was just not true. Obviously, like, he sold me on it. And to be honest, he didn't even sell me on it. It was a product that I wanted to get anyways, and the numbers made sense. I'm a numbers guy. The numbers made sense.
Yeah.
But in my head, I'm like, yo, that guy's a piece of shit. Like, I would never, ever, ever, if he ever calls me again on any of my rentals, I would never, ever work with him again.
Yeah.
I don't want to be that guy. I don't want to be that guy that sells someone a policy a year down the line. They're like, what the fuck? This doesn't even benefit me. And then they're like, oh, this guy sucks.
You want the repeated business.
I want because referrals are so important.
Yeah.
I want someone to say, hey, this guy actually made me money. This guy helped me. This guy knows what he's talking about. You should go talk to him too.
Your reputation's everything, bro.
It is. It's huge. And that's why I go back to just be a good person. Like, just be a good person. Know what you're talking about. Because if you just sell people on random shit, and like, I remember this again, I keep going back to like old things that I used to think of. Like, again, these old people who are pre-approved for like $300 overdraft. They have $100,000 in their account. My manager will be like, oh, why didn't you sell? They don't care about overdraft. Like, what are you talking about? Like what are you saying? I would rather talk to them about their cottage and how they had a good time at their cottage versus giving them saying, oh, you have overdraft? Like what? What?
And they would probably appreciate that conversation more.
Yeah, you know because then they're gonna look at you and they're gonna be like, what they would probably like avoid coming to you next time as a teller. Like because then they're gonna be like, oh, this guy's gonna try and sell me on something.
Yeah.
I don't want to be that guy. I want to be that person who actually has genuine connections, and then from there. By the way, like this, honestly, a lot of the things I talk, like it might actually get me in trouble, to be honest. Like I might not even like, I don't even know if I'm allowed to say half the things I say as a financial advisor now. But at the end of the day, whatever. I don't think people are sound like
but we're not that famous yet, yo.
No, but even that, like, it's not their thing, right?
Yeah, exactly.
Well, even too though, like you got to look at it like this: without you actually coming forward and talking about stuff like this, no one's gonna find this stuff out, right? Like, like as I said earlier, like I thought this was only done in the U.S. and now like I'm listening, but I'm like, what the hell am I doing? I might go do this on Monday.
Literally, I'm thinking the same thing.
Straight up, like, why not?
Kids, same thing with a kid. So people love the idea of RESPs. Right? They love the idea. Oh my God, government contribution. It's growing. Oh my God.
Trash numbers.
The numbers are, so first of all, they only match to a certain extent. I think it was up until you're 14 years old. I think the max contribution is $7,200.
Yep.
That's the max contribution. This is the way I think about it. Okay, the growth is the same growth as you putting it into your own TFSA, right? You just don't get the government contribution part. Let's just say when I turn 20 or when I turn 18 or 21, when I want to pay for my schooling, let's just say the market's down. Am I going to pull the money out on a loss? What happens if the money's down? What if the market's down?
Yeah.
That's number one. Number two, what if my kid doesn't go to university? How many kids now do you know that aren't going to college and aren't going to university? Because people are realizing that college and university is literally just another business that if you're not, like, it's a waste of time.
Yeah.
A lot of kids now aren't going. So that government contribution that you were so high on is gone. You can't use it anymore.
Yeah.
You're so restricted. Same with RSPs. You're so restricted with what you can do versus, again, some people think this might not be the best solution. I genuinely think this is the best solution. Instead of an RESP, why don't you put it into a policy? You put it into a policy when they're young. By the time they're, same thing that you're going to save for them, you're going to end up with almost the same amount of money.
Yeah.
The cash value is guaranteed versus if you need to pull it out when the money is down.
And there's also a death policy.
There's no fluctuation.
There's no fluctuation. It's a certain amount that you're just going. They can use it. They can in an RESP when they pull that money out for school, goes back to the compound interest curve.
Yeah.
That growth is now gone. Versus if you need to pull out your money for school when you're 20 in a policy, it's still going to keep growing. You also have a death benefit to it where it's going to keep growing till the time that they pass away. And that's when you grow the generational wealth, right? Because now your policy goes from you paying, because the policy will obviously grow, you paying for a $500,000 death benefit. By the time your child actually passes away, obviously no one wants to think about that, but it's reality, right? By the time that $500,000 policy, by the time they pass away, is now a $3-4 million policy, $5 million policy. And rinse and repeat. And that's how true generational. I did this illustration. I was very curious. I said that, okay, let's say you're a little bit wealthy, you're relatively wealthy. You can afford $1,000 a month to pay for your kid. If you pay for your kid when they're born, $1,000 a month, and the kid keeps putting it in, right? Let's just say, but by the time they pass away, do you know how much of a death benefit they're gonna get by the time that your kid passes away?
12 times 18. That's
How much do you think?
Let's go like 20 in the 20 mils.
$27 million.
That was close. I was close.
And then that's when because that's when true generational wealth starts. Obviously, I'm not saying everyone can afford $1,000 a month, but it's the concept of let's just say your kid has $2 million that he ends up passing with his grandchild, and no one wants to think of this long term. But again, it goes back to
preparing.
What's the most important thing when you pass away? No one's gonna remember you when you pass away. At the end of the day, no one's gonna remember you, obviously, unless you're like. No one. No one is remembered. No one is remembered. Even if you're, I don't even know. Like even if you're Drake, for example.
I was gonna say Drake.
Who's gonna talk about Drake like 100 years down from now? No one's gonna talk about Drake. Yeah. But you know who is talked about? The Rothschilds.
Yeah.
They're talked about. You know why they're talked about? Is because
generational wealth.
Generational wealth. That's why they're talked about. No one knows who their grandparents are. No one no one cares about that. People care about the name because it's a generational wealth.
How many of your friends have you got to do this?
My friends, none. Because
why though?
Because none of them. First of all, a lot of my friends can't afford the monthly payments or the monthly savings that they have, right? A lot of them don't care to listen. I'm going to be honest with you. So I had to learn this, not the hard way, but I had to learn this. People aren't very open to financial advice because people kind of shut off because number one, a lot of it they don't understand. Second of all, they don't want to feel like they're being sold to, right? So I've had to find a good balance of like, just, you know what, like just don't talk about it anymore. Because if people want to learn, they'll come to you. And I don't want to like kind of hinder those relationships of like, oh, like every time Basil comes on,
it's always about money.
That's all he talks about.
I kind of felt the same way with like real estate. You know what I mean?
Yeah.
Like once I got first property, then second property, it's like you don't want to be that guy always talking about it because then people think you're bragging or people think, but you're genuinely just trying to educate, right?
All you're doing is you're genuinely just trying to, like, I know that this stuff works. And I know that if people who I care about genuinely listen to it, they could be in much better positions later on. But you kind of have to have a balance, honestly, and that's kind of what I learned. So that's why a lot of my friends aren't honest because they don't care to learn, they don't care to listen. A lot of them can't afford it, and a lot of it is just like again lack of education. Again, I just don't want to be too pushy on people.
Yeah.
Stuff like this, I feel like I can talk freely because I know that the people listening to this are people who want to learn anyways.
For sure.
That's why I like coming on. That's why I like doing presentations because the people who go to your presentations, the people who listen to these podcasts are people who actually want to learn.
Yeah.
Versus like me going to my friends and being like, hey, we're watching a basketball game. Let's talk about like, you know what I mean?
Yeah.
So it's a balance, but that's why a lot of them haven't gone into it. I would love for all of them to get onto
100%.
it. Not for me, not for my benefit, but just for the benefit of genuinely like this is stuff that I'm passionate about because I want you guys to do better. Like my own siblings, like I want it so badly because I know it works.
Yeah.
But you have to have a good balance of not being too pushy,
but
still like kind of like just reminding people here and there because it does work, man. This stuff does work. All it takes is just learning about it.
Have you seen somebody like do well off of this? Like, have you seen it in action like before?
My mortgage broker, his annual premium is I think $100,000. Now keep in mind he's doing very well for himself, but that's all he does. All he does is as soon as he has a cash value, when he builds up 10, 15 grand, pulls it out, lends it. Pulls it out, lends it. Pulls it out, lends it.
And he's still making money from the compound before, and then now he's making another percentage off somebody's lending.
Man, this stuff works. Like this stuff works. If it works. Like there's no two ways about it. Like it works. And I don't want to sound like I'm too salesy. I really hope I'm not coming off salesy. I'm just saying like it's all there. The numbers are all there. If you like, for example, if you bought a car, okay, let's just say you bought a car and you paid 30 grand for it. Actually, someone I actually know did the numbers for this, and he showed everything. I would love to. I'll send it to you guys later if you guys want. But he compared buying a car for 30 grand when you finance at a company versus buying it with a policy. Okay. If you finance your car, I think it was at 5% or 6%. The exact number. Yeah. But it was a 5-year period. You buy a car for 30 grand. The interest that you're paying was the total interest that you're paying is like it was around like $3,500
at the end of it, right?
Yeah, at the end of it, something along those lines.
It's something I'm going through too. Yeah. So.
Yeah. So that's what most people do. Most people will just buy a car. They'll go to they'll finance it from the dealership, and that's it. And they pay their interest, and then 5 years later they own a car. Right? Yeah. That's the standard.
Simple, yeah.
Very, very simple, very straightforward. Now, what if I tell you, okay, instead of buying it from your own money or financing it, okay, instead of financing it from the company, you borrow it from your policy. You're gonna end up paying $3,500. It's gonna be similar, the interest. At the end of all of it, you're going to be paying $3,500 in interest, but you actually grew that $30,000 actually grew another $8,000 something. So you actually made $5,000.
Yeah.
So instead of, it's not that you made you like in that 5 years, you actually netted $5,000 versus paying through. Again, I know it's simple numbers. It's very low numbers, but it's because again it's only $30,000.
Yeah.
Instead of paying the finance company $3,500,
you're paying yourself in a way.
All you're doing is just paying it back into the policy, the interest. So you're paying it back into the policy, but you also made $5,000 while buying your car.
Yeah, no, that's crazy, bro.
Like, you know what I mean?
Yeah.
Like you netted that amount because you compounded 8,000, you paid 3,000 in interest versus only paying 3,000 interest to the finance company. And that's money that you're never going to see again. Versus like, you know what I mean? Versus like you paying that $5,000, it goes back into your policy. Now your policy actually grew $5,000 while you had that car.
Bro, it's crazy how you have to dig so deep to find this sort of information.
100%. I was gonna ask, like, do insurance companies offer, like, are they willing to offer this, or do you feel like they keep it kind of quiet? Like, this is some like only the perfect person kind of thing, you know?
To be honest, like I've heard a mix of both. I think it's a big just lack of knowledge from actual advisors too. So I started with a group of we were a total of 5 advisors that started at the same time. I'm the only advisor that knows any of this stuff from the 5 advisors that started me, or the other 4. None of them know any, because I actually like want to learn. Also, I have a real estate background, right? So that kind of helps. I always similar to you, I always heard about the idea of it. I always heard about it, but I never actually dug into it until that I saw. I'm like, oh, Sun Life actually offers this. Let me learn about it. I'm the only one that actually knows this stuff in my office from the 5 people that started. So I think it's a mix of a lack of knowledge. I also heard that apparently a lot of the big advisors prefer people who invest with them versus doing this stuff because they make more money off of those.
True. So it goes back to just being like,
it goes back to again, like I don't really know how true that is because I think you can make money on both. You can make good money on both.
Yeah.
But I don't know. I don't really know the numbers of like the comparison. Again, I've heard a mix of both. I heard some advisors, like all the big advisors, don't want to talk about it or don't care because they make. It's not that they don't want to educate people, but they're making more money doing in mutual fund investments.
Yeah, 100%.
And I think it's just a big lack of knowledge. That's why people don't really talk about it.
Yo, you're very knowledgeable and you seem very passionate about the topic. I guess, like, what is your why, bro? What's like that light under your ass that's making you, like, you know, keep on going and pushing? Because you have a lot of things going on and you're passionate. You're pushing through. And I know in 3-5 years, I know it's going to be a whole different story, but like, in a successful way. You know what I mean?
Man, I think my why is the same as like a lot of investors, a lot of entrepreneurs. It's very, very similar. It's having, so it used to be, I want to be happy, right? I'll tell you another story. So I talked to this guy, very Christian guy. I'm Muslim myself, but like this guy's like very, very religious Christian guy, very family oriented. That's literally all he cares about. His religion and his family. That's all he cares about. That's why he's a real estate agent, but also invests, and that's why he does it for his family, and that's all he cares about. So we had a conversation. He asked me this thing. He's, what's your why? He's like, why do you do this stuff? Like, what's your why? And I told him, I'm like, I want to be happy. I told him, like, I want to live my life. I just want to be happy in 10 years. I want to be happy now, but like, I just want to always just be happy. And he gave me the perspective of life isn't fulfilling if all you are is just happy. You need emotion. You need to be sad. You need to be motivated. You need to be down. You need to be happy. You need emotion throughout your life for you to keep going and for you to actually like get the most out of life. So he told me, he's like, his why, and this is now my why. This is I took it and I will never change my answer. It's options. That's my why. Is purely options. I want to have the option to, if I want to work, I can work. If I want to travel, I can travel. If my family member is sick and I want to go to the hospital, I can take as much time as I want. I don't have to be like, oh, hey, manager X, whatever, can I take a week off? I want to have options. I want to have the option to travel, not travel, to take a day off, to not take a day off, to buy this house, to not, you know what I mean? Like, I just want to have options.
I'm not gonna lie, that's probably the why that I think resonates.
That's probably the best answer.
That's all it comes down to, man. Like, you know why I quit TD, by the way? So I'll tell you a little bit. So my last 5 years has been all over the place. Mm-hmm. It's been so up and down. Like, I remember New Year's of 2020. Mm-hmm. I rarely cry. I don't cry. I rarely ever cry. I was on the phone with my friend and I bawled my eyes out with my friend because there was just so much emotion. Like, my last 5 years has been so up and down of like stress, happiness, horrible things. Like, there's just so much going on. And when I was working all those 80 hours, whatever, 90 hours a week, I was going through so much. And the reason why I just like kept going through is because it went back to just keep doing it, man. Like, you're like, it'll pay off eventually. So what happened was I finished my last year of schooling, barely. I suck at school. I'm not, oh my God. maybe not school. I suck at engineering. I barely scraped by. I barely got. I'm telling you, like I literally, I will be 100% honest. If Western was not a straight business, I would not have passed engineering. I would have been a dropout because engineering was just not for me. Mm-hmm. I have an engineering brain. Like I'm a very like critical thinker, and I love like reverse engineering stuff and thinking very logically. But the material that we were learning, not for me. Man, we were learning about buildings, not even building. We were learning about like concrete and how to design concrete and how to design steel beam. It's just such boring shit, and it's just so like, it's just like, what the fuck are we even talking about? Mm-hmm. That I just did not care to learn it. So my fourth year, I was going through. So I thought I was gonna like drop out. Mm-hmm. I swear to God, and I ended up quitting TD, and the reason I quit TD was because I wanted to travel. I'm a big sports guy. I love sports. Big soccer guy, basketball, football. I will literally travel for the sole purpose of
just to watch a game.
Just to go watch a game. That's what I did. Yeah. That's what I did. If it wasn't for work, literally, I was gonna be in England a week ago just to watch Man United play Fulham, and Man United play City, and I was gonna come back. That's it. I was gonna go for a week just to watch those two games.
That's so sick.
That's it. I love sports. So I wanted to watch a certain amount of games when I was in January of 2022. And I told my manager, I'm like, hey, I want 2 weeks off. She's like, no, I can't do that. She's like, we can't give you She's like, I wanted to go through during December and January, like those. She's like, no, we can't do that. It's a busy season. We can't do that. I was like, what do you mean? Like, why? Like, I'm giving you like 3 months notice.
Yeah.
She's like, no, like we can't do that. She's like, I can give you maybe a week off. I was like, what? Like, I don't want a week off. I want 2 weeks. I have a specific plan. She goes, no. And then I swear to God, a week later, I handed in my 2 week notice, and I ended up going full time in real estate because I wanted it to allow me to travel whenever I want. That's when obviously all the fuckery happened with the market, and everything took a fucking shit. And that's how I ended up becoming an advisor, because I ended up resorting to, I'm like, man, like I need a job.
Yeah.
Like I need some sort of job. I need like steady income. And then I ended up, someone luckily reached out to me on LinkedIn being like, hey, like we're hiring associates for this advisor, and like you seem like a good candidate, whatever. And I obviously I entertained it because I was like, you know what, like maybe a job would be good for me right now. And I ended up doing an interview, 3 interviews. I ended up not getting it. Mm-hmm. And I ended up reaching out to her a month later being like, hey, can you just, if you know anyone who's interested in an associate, let me know. I'm like kind of like looking for a job right now. She ended up giving me her manager's number, talked to him, ended up having a conversation. He goes like, I don't know why you'd even want to be an associate. Like you should be an advisor. Like you know too much.
So he just bumped you right up.
So just bumped me straight to an advisor. But this is where perseverance comes in, because oh my God, let me tell you, I started in October. Mm-hmm. The way Sun Life does it is you need to get 5 sales for them to onboard you.
True. Okay.
Because I understand it, because they want to see a level of commitment. Because it's onboarding with Sun Life is a very long process. They put a lot of money into you, a lot of training. So they want to see a level of commitment. They don't want to do this for just everyone. I understand it. It's shitty at the time because you're like, oh, now I need to get 5 sales for me to even start my job. I understood it. And when I tell you that was the biggest struggle of my life, I thought it was going to be so much. I thought it was going to be so easy. It was the hardest 5 sales. It took me so long. And I think come January time, I didn't even have a single sale. So from all the way from end of October to January, I didn't have a single sale. And I was, you know what, fuck it. Like, why am I doing this? Like, what the fuck am I doing right now? Like, let me go find a normal 9-to-5 job and call it a day. I don't want to be on commission. I don't want to be like my own boss. I don't want to do any of that type of stuff. I just want a normal 9-to-5. I got very discouraged at the time. I started applying to so many places, and they were all hiring. Yeah. And my resume, like, I'm not the smartest kid, but my resume is a pretty good resume. You know what I mean? Like, I started my own company. I worked at the bank for a long time. Like, I worked at a civil firm, like engineer. You know what I mean? Like, my resume is not bad. You know what I mean? Man, I didn't get a single interview. Not a single interview. I applied to so many places. Every single one, like, sorry, no, like with other candidates. And I was like, what the fuck? Like, what is going on here? Like, what is happening in my life? I was never used to. I mean, I started like waking up at like 11 p.m. Or sorry, not 11 a.m. like 12 p.m. Like I genuinely felt like an actual bum. I was like, what the fuck is going on here? I'm not used to this. What's happening in my life? So I was like, no, you know what? Like, I'm like, listen, I have a job right now. again as the financial advisor. Like, technically, it was still there. I didn't do anything with it. I didn't work. I didn't actually like try to get any more clients because I was so discouraged. I was, you know what? Let me refocus. Let me like realign myself. I have this job opportunity that's already presented to myself. I don't have to do another interview. I already have it. I control my own schedule because technically you're self-contracted, right?
Yeah.
So I control my own schedule, which means that if I work my ass off for the first 5 years, 6 years, 7 years, after I can do my own schedule, I can literally do whatever I want.
Yeah.
I can do whatever I want now, but it's just obviously I don't want to because I want to work now.
Yeah.
So I get to control my own schedule. The pay is very good, right? And you get to talk about, I've always been very like, I loved always talking about finances with people. Even before I was an advisor, I loved just educating people about it. So another thing is you teach people things you actually like talking about. So I was like, on paper, this is literally like a perfect job for me. Like on paper, this is perfect because it does everything that I want. Again, me controlling my own schedule means that I can also do real estate on the side as well. Yeah. Right? It's literally perfect on paper. So I was like, why am I steering away from this job that I already technically have? Yeah. And do that. So I ended up like, no, you know what? Like, fuck it. I'm gonna go balls to the wall. I ended up getting all my sales within a week. I don't know how, even though I didn't get it for the first like 6 months. But then all of a sudden in a week I ended up getting them. So I got all my 5 sales in a week. I became the second highest performer in my district for that month that I started. And then everyone started knowing me. I was like, oh, like you did these sales, you did big sales, whatever. And now it's like, absolutely I would never, like, I'm so glad I ended up persevering and getting myself through that mental block of just being like, just stop being stupid and just focus. Just realize.
What were some things you did to like realign yourself? Like, were you going to the gym? Were you just like waking up early?
It just went back to my why. Yeah. That's all it is. Like, you want the options. I genuinely recommend for everyone, whether you're a business owner, whether you're not, whoever you are, it doesn't matter what you do. Sit down and genuinely understand what your why is in life. And if you don't, figure it out. Because I'm telling you, motivation, let me tell you something about motivation. Motivation is cool, but motivation is temporary. Motivation is very temporary. It's an up and down thing, right? Like, people will be motivated for 2 days, 3 days. But then what happens after you're motivated? Are you disciplined? The only way you can be disciplined is knowing why you're doing what you're doing. I go to the gym. You know why I go to the gym? Not because I don't look like a guy that goes to the gym. I'm not like a built guy. The only reason I go to the gym is so that I can eat like I want. Because I love food. Facts. The only reason I go to the gym is so I can eat as much as I want and whatever I want and not have to worry about it. Not because I want to get big. Like, obviously, okay, it's cool to get big, but like that's my why of going to the gym. Yeah. So if I'm eating unhealthy and I'm not going to the gym, again, it goes back to the why. Like just go back to the gym so you can eat the way you're eating.
Yeah. Options.
Exactly.
Literally. So fucked.
So I think everyone needs to just genuinely sit down and understand what their why is in life, and whether that's just to be a family oriented person and be like you're comfortable with just being a family guy who just works a normal job, and there's no knock on that. I'm not the type. I know all these like new. It's like trendy to say, oh, 9 to 5 suck. Like, man, 9 to 5s are what makes people be able to even build businesses, because without 9 to 5s, like you're not gonna be able to have the money to do it. Yeah. I'm not like those people. Like, I hate people that knock and oh my god, you work 9 to 5, that sucks, whatever. Yeah. No, like, man, some people want balance in their life. Yeah. Some people want routine. Some people want schedules. Like, not everyone's built to be like an entrepreneur and go. Like, being an entrepreneur is hard, man. It's not easy. It's so much chaos. Like, it's so much chaos. Like, you guys know, like, being an entrepreneur, like, you don't know what your days look like. Like, it's so much chaos. Some people don't want that.
Even too, you can't have everyone be an entrepreneur because who's going to work, right? Exactly, at the end of it.
Exactly. Some people are comfortable just working a normal job, like going home, seeing their family, like taking 2 weeks off a year, not everyone needs to be an entrepreneur for them to be successful. I know people that are making $400,000, $500,000 a year, more than most entrepreneurs, just working a normal job. Yeah, they're just good at what they do. Mm-hmm. That's all it is. Just be good at what you do, no matter what you do. Whether you're an entrepreneur or you are like you work for a company, just be good at it. Yeah. And that's the biggest thing.
It's the ones that are complaining, the ones who have like the 9 to 4, but they're complaining because like you said, there's some people who are working 9 to 4, happiest people ever. Good for you. You're good on you. Like, that's your life. Like, that's amazing. I wish I was like that because like you said, entrepreneurship is very chaotic. But like, it's the people who who are complaining about that, and they don't even take that extra step in like educating themselves, going to networking events, like trying to grow. Absolutely. If you're staying in that comfortable zone, bro, that's a scary place to stay in.
100%. And even too, it's like you can't be the person to say you want better for yourself but not do anything about it.
That's my biggest pet peeve. One of my biggest pet peeves is people who complain about their situation but don't change anything about it. Like, I'm going to be honest, man. Like, I grew up differently than here. My mentality is very different than North American mentality. I think North Americans think that their lifestyle or their culture is just superior. Let me tell you something. North American culture is the worst culture on planet Earth.
I agree.
Everyone here is depressed. Everyone here is stressed. Everyone here is in debt. Everyone here is sad. Everyone here has like everyone here is immune system. Like, I know it's so stupid. Like, North American culture genuinely is the worst on planet Earth. Don't get me wrong. I understand like the whole, like, people are sad. I understand it. The whole depression stuff, anxiety. I understand it, and I fully believe that if you genuinely suffer from those illnesses, right, it can be a huge burden on your life, and obviously you should seek the right treatment, because it can probably. I've never had it, but I can imagine it probably makes people's lives like horrible, and it sucks.
Yeah.
But at the same time, people here in again, in my opinion, this is just my opinion. I don't know. You can talk shit about me if you want, but like North American culture, like, it's becoming like cool to say, "Oh, I'm depressed." Why are you depressed? Like, what is, like, no one's just, again, obviously there are people who genuinely have those mental, like, it's like a genuine mental disability that you're depressed. But if everyone is saying they're depressed, it takes away from the people who genuinely suffer from it, right? Everyone says, "Oh, I have OCD." Everyone says, "I have depression." It's like, no, you don't. Like, people who say, like, "I have OCD." No, you just like your room organized. That doesn't mean you have OCD, man. Like, OCD is like a genuine illness. Like, people take those things so lightly. Like, you need to, sometimes if you're sad, change your environment. Like, a change of environment, people underestimate what a change of environment can do. I'll tell you another story. There's a girl that I know who, again, maybe this is like probably like a shitty thing on my end. I'm a very, like, again, I told him, I am an engineer at the end of the day. I'm a very logical person. I see things in numbers and just see things from very logical perspectives. So it was a girl that I know, and she was telling me about her financial issues, because obviously, again, like me being a financial advisor, like,
she seeks help from me, of course.
Yeah. So she was telling me, how she was always sad. She was depressed. She was always sad. And again, I didn't undermine it. I said, yeah, like, makes sense, whatever. I said, okay, like, what is the root cause of your problem? Like, what makes you sad? She goes, her family environment. Her family environment is very, very toxic, whatever. I'm like, okay, can you change your environment? She goes, no, I'd have to move out. Okay, what can it take you to move out? I need to earn more. Like, I don't have money to move out. Okay, what are you doing to change that? She's unemployed. Okay, so why can't you afford it? Because I spend all my money on weed and alcohol. Why do you do that? Because you're depressed. Because she's depressed.
It's a circle.
So it's a circle, right? So I said, okay, let's dissect it. Again, let's just reverse engineer this.
Yeah.
You're depressed, or no, you can't move out because you're spending all your money on things that are giving you highs because you're depressed about your family situation. So if you get a job or if you work and don't spend money on alcohol and weed, you'll be able to save more money, which will be able to move you out.
And then your change of environment.
And then you're not sad anymore, which means you're gonna not spend as much money on weed and alcohol again. You're gonna save more money. Because again, you're gonna be saving more money because again, you're not depressed because it goes.
It's a circle again.
It's literally just a circle. It's just again, it's so easy just to go to the easy things. It's so comfortable to go to the easy solutions. Like I'm just gonna smoke. So I personally don't smoke. Like I don't smoke anything, and no knock on anything. I think if you like, I personally just don't smoke. I've always been in sports my whole life.
Yeah,
and I don't drink either. But it always goes back to like people will go with the easy route because it's what's
easy.
there.
Yeah,
it's what's easy. If you just actually take a couple of months, I'm not like no one's saying a couple of months of saving a little bit of your money by not spending it on things that are at the end of the day just giving you highs to get you out of that depression for a very temporary period of time, your whole environment changes. Your whole life can change based on that one decision. It's as simple as that. Like I genuinely think, again, maybe it's not as simple as that, but if people just kind of just focus a little bit and just internalize it and just actually understand what a change of environment and what a few months can do to you. Those months of when I was working like those like the 90 hours a week,
yeah,
I did burn out. 100% I burnt out. But would I change it? Absolutely not. I grew in those 9 months. I changed my whole life and grew more than I did in the past 4 years.
Yeah.
No question in my mind. Because it was a change of environment. I changed the way I was doing things. I changed my understanding. I changed just the way I looked at things. Yeah. That's all I did. And then that 9 months completely changed my life.
Yeah, now you're here.
Now I'm here, and not even crush. I mean, I'm a normal. Like I'm not like I'm. There's still a long ways to go. I'm not doing any better than any average person. Like, you know what I mean? There's still a long way to go. But
humble guy.
Yeah. No, you really are though, bro. Like
that's all it comes down to, man. Just understanding like your why and understanding what you can change your environment and that's all it is. Like that's literally what it comes down to. You can change your whole life just on small.
What are your goals are for the next 3 years? Like anything certain that you're pushing or focusing on?
Yeah, so I want to. I want to grow a big book of clients for my advising job. I also want to get more on the real estate side. I want to get more into bigger type projects like 12 plexes, kind of get into more of the commercial space. Yeah, that's a big thing for me. We are also, this is kind of a very, very new thing, very side thing.
That smile that he has.
No, it's very new, but it's something that I really want to do. I want to push a lot of Canadian investors to invest in Dubai. That's the thing that I'm starting to work on right now, because I have a lot of, I have connections in Dubai that allow you to buy real estate there. And people talk about here, like the 1% rule, which is not a thing, but man, like people invest in Canada, like it's great to invest in Canada, but at the same time,
over there is way crazier. Way crazy.
It's way crazier, but you're actually making cash flow.
Isn't it 100%? Like there's no like whatever. If I make $1 million, I get $1 million back. No, like
the tax, personal. On the personal. So there is corporate tax.
It's like
there.
20 something. Right?
No, it's only like 9% or 8%. So if you do open a corporation, there is a 9% like corporate tax.
Yeah.
But on a personal level, there isn't. Yeah. So there you make all the money.
Is real estate expensive out there? Like
no, that's what I love about it.
Yeah.
That's why I want to put. Man, how much do you think it would cost you to buy an apartment there?
Apartment in Dubai?
I don't know. You would think you'd be like $1 million. You would think like Toronto prices.
It'd be.
You would think Toronto prices, right?
Yeah, you would think so, right? It costs like 250 grand.
No,
I swear to God, 250 grand to 300 grand. And you know what's the funny thing? On a $250,000 to $300,000 property, there, you're cash flowing like your net, not your gross. You're netting about $2,500 a month.
Jeez. On the, what?
Yeah, because you're Airbnb-ing it there.
Yeah.
And there's not like here where their Airbnbs there. They obviously love Airbnb. It's the biggest thing there. Man, my brother has an apartment that he bought for I think 226 grand. Mm-hmm. Right in Yas Island. For those who don't know where Yas Island, that's where Ferrari World is. That's where UFC is. Like that's where UFC is. And that's where they do it. Right. That's where the Formula 1 track is in Abu Dhabi.
That's sick.
Right by there, he bought it for $226,000, and he's netting about, like I think he's netting like around like something along like $2,500 a month.
Damn.
Like net after like paying for all the expenses, and that's including him paying like for the fee for Airbnb, like there's a company there.
Yeah.
And he doesn't do
the management.
So they're all the property managers.
He doesn't deal with anything.
It's crazy that you bring
his apartment is fully booked up until February of 2024.
Damn.
That's the crazy part. Like even too, like I just took a mentorship and same thing. He's like my mentor went to Dubai and he's like essentially resigning his Canadian and just going there and just same as you said, just buying properties and just Airbnb it out.
Man, it's crazy there. Like it's crazy. So that's kind of what we're. I mean, obviously, if anyone's interested in buying something, let me know. But that's a very, very new thing. I'm not sure how obviously it's gonna work. Like, but that's
are the mortgages all you have to pay 100% mortgage?
So
or can you hold a mortgage?
It depends. Like if you're a Canadian guy who like. If you're Canadian, then you're
we're still bound by Canadian taxes to pay, right?
No, you're paying.
Oh yeah, is it? What's the currency? Like how are you paying? Is it like two? You said it's 220. Yeah.
So that's Canadian.
Canadian.
So you're buying in it's called AED, which is like dirhams.
Yep.
So you're buying there, but like that's the numbers that I'm talking about are Canadian dollars.
So,
that's Canadian dollars.
That's wild.
It's insane. So, sorry, what was the question?
Just like the mortgage, like what?
Oh,
you have to
the
put
mortgage.
100%.
No, so it depends. You can get a mortgage there. As a Canadian, it's a little bit harder. Like you kind of have to you have to know someone there who's willing to get a mortgage for you.
Oh, okay.
Yeah, you know what I mean. But if not, you're paying 100%.
Yeah, 100%.
But still, 100% of like again, your people here put down payments of 250, 300 grand.
Yeah.
You know what I mean? So.
No, bro, we're gonna talk, bro, because I'm
Even
definitely getting something in Dubai.
Even too, it's crazy because like he's saying if he's making 25K, you pay off the house within 10 months, essentially.
If you're making 25K
K per like from like the Airbnb and he's only paying 226, like you're paying it off in like easy time.
Yeah, like so that would be 25K a year.
Yeah,
you're saying.
Oh, yearly. Okay.
Well, no, the 2500 a month is what you're netting.
Okay.
2,500 net. But again, keep in mind, you know how we talk about here, like we talk about 1% rule?
Yeah.
Of gross. First of all, 1% rule does not exist anymore here. There, you're netting almost 1%.
Yeah, it's crazy.
So it's a lot different. And yeah, anyways, it's just, that's kind of like a thing that I don't know if that's ever going to actually.
No, bro, like I'm telling you right now, that's like a need. You know what I mean? Like bridging that gap between like investors here and investors in Dubai. Like you could be that man, bro.
Well, people do that in the States. People do that in the States all the time. Like, do you know Sean Rhea?
Yes.
He's the one that's doing it in Belize.
Okay.
So he's kind of doing the same thing. He's bridging the gap between Belize and here. So
same as Mike in Colombia and here.
Exactly.
Right?
So I kind of want to be the guy who's bridging
to
the
Dubai.
gap between Dubai and here. And I think, and to be honest, if you tell me would you rather live in Belize or would you rather do Dubai,
I'm going to Dubai for sure. Bro.
Or Colombia.
Belize would be nice, but Dubai's a little nicer.
Same thing with Colombia. I'd rather live in Dubai, or I'd rather have an apartment in Dubai where I can kind of go whenever.
Yeah.
And
no, that's awesome, bro. That's so sick. Okay.
Yeah, honestly, bro, like this was an amazing episode.
Bro,
I feel like there was so much like education.
Thank you for having me.
Honestly,
I appreciate it.
Man,
I feel like it was more like an interview. What's it called? I don't know if you like.
Honestly, man, you educated the fuck out of me right now. Like I'd honestly.
He's about to go get a policy. He's about to fucking go. Like I'm Dubai. This guy's amped.
Straight up, like even too, like one of my buddies is an advisor. I'm gonna literally want to talk to him later. I'm gonna be like, why have you not told me about this before? Like not in like a bad way, right? Because like now it's the same thing you said. Now I get to educate someone else.
Does he have an insurance? Does he have insurance? Like, does he do insurance as well as investments, or just investments?
No, just investments.
So that's probably why. So that's the thing. You need to be life licensed, right, to be able to do that. So maybe why?
Okay.
Because if you're a financial advisor at TD, like you can't.
That's where he is.
Yeah, no, you can't do that.
True.
Like it's not a thing there, because there it's just mutual funds and mortgages.
But even too, he just didn't know about it. Kind of is the thing where I'm going out about it, right? Like now knowing about it, he'll probably look into, and then from there, who knows, right?
Absolutely. It's you. The more you.
Knowledge
the more
is power.
you talk, that's why I like going on. As I told you, that's why I like going on podcasts and presentations, because a lot of people don't know about it. They know the idea of it. They understand the concept of like, like just money that you borrow against your life insurance, but it's like you don't actually know the details of it.
Yeah, exactly. And like they said, a lot of people think it's just in the States, right? So,
I agree. Because in the States it's so popular. All the videos that I used to watch were all in the States. They're all people in the States.
Okay.
So I can definitely see why you think that. I thought the same thing too when I first started.
Too, like I remember we were talking to Chase when that's what I thought, because like remember he's running everything out of the US, right? So I thought he's probably going to the US because it's only accessible there, but now we know it's a little different now.
Yeah.
No man, you can put policies on anyone, anything.
Yeah, the States is rowdy, bro. You can buy policy for this person and then they end up murdering them and they get the money.
No,
that shit happens in the States a lot.
I don't know about murdering or whatever, but like here, I don't know if you want to do that, but like here like you can put policies on anyone. You can put policies on your kid. Damn, like people, this is kind of actually I'm not even gonna say it, but it doesn't matter. But I'll tell you after the pod. I'll tell you after. But yeah, like you can put one on your kid. Like if you're in a business, you can put one on your kid. Like so some people are too old, right? But you can put it
where they won't qualify, so you put it on someone.
You can always qualify. You can always qualify, but it's just unless obviously you're sick. Sorry, not always qualify. If you're sick, obviously they won't give it to you.
Would premiums be higher if I'm older? I'm assuming.
Yeah. So the older you are, that's why I always tell people. People think that like, I'm healthy, I'm young, I don't need it. No, that's literally the complete opposite. The healthier you are, the younger you are, the cheaper it is, and the more you can qualify. If you get sick, you will not be able to qualify. Same with critical illness. Like critical illness is the same thing. People think that I'm healthy, I'm sick, I don't need it. No. It's actually the cheapest, and it's the cheapest when you're young.
Healthy, okay.
Because so that's what I'm saying. So when I was saying like when people are older, they can still qualify. Like if you're like 50 and healthy, you can still qualify, but it's gonna be more expensive. So you can just put it on other people. You can put it on a younger person in a business. That's how
my brother's getting one soon.
that's what I'm telling you. Like every parent, man, like every parent who has a newborn, like trust me when I tell you, like this stuff will pay dividends. So like it'll just like you will like your kid will thank you so hard. Like I wish obviously my parents did it. Again, I don't blame my parents. They don't know. It's not a thing. But I'm telling you, your kid will thank you so much if you educate them on not just the policy, but like not just getting them a policy. They're gonna thank you for getting them a policy, but they're gonna thank you so much for educating them on just finance in general. Like I wish every parent. Obviously, if you're living paycheck to paycheck, that's different. Like if you can barely afford a kid, but if you can afford like $200, $300, $400, $500 for your kid a month, I'm telling you, like I wish parents would just do this. Yeah, because it just works.
Facts. All right, you got one more question here then before we wrap up.
Good. Okay, so what happens if the policyholder passes away with a loan on cash value?
It just gets deducted from the death benefit. That's the beauty about it, is that you don't ever have to pay that back. That's the nice thing about this loan. It's uncallable, which means that let's just say things go south. Let's just say you're in a project. Let's just say you borrow money for this. Yeah. Right. And things go south. Right. If you go to a bank and you get a mortgage, right, or like a second position or whatever, and you borrow it. Yeah. You're fucked. They're taking this home. You're screwed. You're fucked. With this, it's uncallable. It doesn't matter. You literally don't ever have to pay it back.
You just walk away.
Because you'll just get it from the death benefit when you pass away. So just say you borrow $100,000, or what people when they want to retire. Again, I don't recommend this because obviously you don't want to you want to maximize. You don't want to pay interest on it. But whatever. If people really want, when they're 60, if they have $1 million in their cash value, let's say they saved up their whole life in their cash value, they have $1 million, $2 million. They borrow it for retirement, and that's it. That's it. You just live off. You don't ever have to pay it back, because when you die, it'll just get subtracted by like whatever your beneficiary is. It'll just get subtracted by that.
Man, sounds so good.
It almost sounds too good to be true.
Honestly, you hear that all the time. Right? You hear that all the time. You hear that all the time. And I'm telling you, it's honestly just a great product. Yeah. You hear that all the time. I hear that. The first person I said, he said the same thing.
You know what's messed up? I find the best products are the hardest ones to find sometimes.
Oh yeah.
Like because, stuff like, you know what I mean?
Yeah, because they're the most complicated, or they're the most that it takes to, because I don't want to sound like those like anti-government people, because I'm really not. Like I'm not like a big oh, the government sucks. Like yeah. But at the same time, it sucks. There's a system, right? There's a system to it. The government wants you to be in a certain system. They want RESPs. They want RSPs. They want bonds. They want it. At the end of the day, there's a system, right? And the system is what makes the government the most money. They're the ones with the most money, so they're the ones that are going to push the things that they want to be pushed the most, right? Yeah. Like I'm sure if the government funded like a whole life policy type course, like they push, you know what I mean? Yeah, if it benefits them, I'm sure they'd push it as much as they want. But the things that benefit them are RSPs and RSPs, and that's why they don't. Yeah, that's why I don't hear about it. It doesn't benefit them.
Exactly. But yo, honestly, I appreciate your time, bro. You really educated me, honestly, and like I'm glad you reached out. You know what I mean? Yeah, because this was a very big fucking episode. To be honest,
I'm not gonna lie. I did not expect the episode to I didn't know what I was jumping into. In the essence of like when we talked about infinite bank, I didn't know this is what it is. Yeah, it's crazy.
Yeah. It is, again, to anyone who doesn't understand. Like there are people that are gonna say like, oh, it's like you're an insurance salesman at the end of the day, so you're gonna try and sell. It's like no, like. There's a lot of policies that we have that I don't like to push because they don't benefit people. Yeah. This is one of the things that I genuinely believe.
Yeah. No, and that comes across, bro. It's very clear that like, you believe in it. You know, you're not screwing around. Yeah.
I try.
No, it's awesome.
Anyways, thanks for having me, guys.
Yeah, make sure you like, comment, and subscribe, and we'll put your Instagram shit up here too, so everyone sees it. And that's a wrap, bro. Thank you.